Hi, welcome to this video day, 25th of May. We are on Sunday. We're just going to be looking at a couple of market reversals today, or potential market reversals. Now, we are looking for trend changes in GBP, AUD, and GBP PLN. We'll go over to the charts in just a moment. Now, sterling has sold off heavily to the downside, and we're going to just look in this video at the sentiment in terms of both pairs, where speculators are predominantly sterling bearish. Try and work out if the bearish fundamentals are priced in, and then just use simple technicals to basically warn us if there is going to be a trend reversal coming. I think the technical setups point to sterling going higher. We think the bearish fundamentals are getting priced in. Speculators are heavily short, so going long the British pound on confirmation offers good risk to reward, low risk and high reward on the other side. Right, what we're going to do is we're going to go and take a look at these trade setups in more detail. But just before we do so, of course, please keep in mind it is my view as of this specific moment in time. It can, of course, change in line with the market conditions and action. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, all you need to do is click on the link beneath this video and get live access to our members center. You can also follow us on Facebook and join our Facebook group of traders. Right, trade setup to look at first is GBP AUD. Right, from the GBP against the AUD, I'll do the technicals in a moment. We had risk off, pound had a nice big rally, and we've got risk on now. Pound has sold off really hard, and there is a bearish view towards sterling by the majority. I picked out a headline from Reuters. There's plenty of others on news wires. Beleaguered sterling heads into a perfect storm. Now, in terms of the perfect storm they're referring to, I've written out some points down here. I think they're getting priced in, and the technicals actually indicate that as well. One point I've missed out, which was in the sterling article, was that basically Reuters see Brexit negotiations as a big deal in relation to sterling. They're not. The end of the year. We're a long way away from the end of the year, but they've listed out these other 4 points as well. Money markets see negative rates in the UK, and speculators are saying UK going to negative rates. Is the UK going to negative rates? Andy Harlane, chief economist at the BOE, has said no. And the board of the Bank of England do not see negative rates. If they come, it's priced in. My own view is they won't be coming. Sterling is undervalued on a historical basis. Sold off really hard on Brexit. It had made quite a reasonable rally, and then you had the risk on come in again, and the Aussies pushed the GBP down. So if the GBP does get a rally on, it could be substantial, and speculators are heavily short. Okay, Britain's economy shrank by a record 5.8% in March. Big deal. The UK isn't alone, is it? Most major economies have taken big hits. British public debt jumped close to 100% of the country's economic output in April, its highest in nearly 60 years. Well, we know the UK's got high debt. I mean, that's in the price, and it's not going to be a driver. If we get a pound rally, you often see rallies of currencies with high debt. I won't go through numerous examples, but I think they just put that in, just to make it really bearish for sterling. Now, in terms of the Aussie bullish fundamentals, they priced in. It's heavily exposed to global trade and growth, but that's actually bearish. But the market is seeing a V-shaped recovery. So a lot in the media are talking about, global economy is suddenly going to return to growth next year. That is fantasy. It's not going to happen. And also the media makes a lot about the China recovery in inverted commas. They say, well, China's dealt well with the pandemic. They've gone back to work. So what? They've got no internal demand, and their export markets have dried up. And if their export markets have dried up, China very export driven. The need for commodities, and 33%, I think, of Australia's exports go to China. They're not going to need as much in the way of raw materials. Iron ore, that's been fairly firm, but that's seasonal. And at this time of year, you will see iron ore prices, I think, decline, and they're not going to need as much iron ore in future, the Chinese. So basically, I would take that as yeah, bearish. Market's just looking at the best possible scenario that they can. It has done well in terms of controlling the pandemic, Australia, but it's export led, so it doesn't matter if the country is open for business, so to speak. It has to export. Its exports will shrink, and speculators are heavily long as well. Now, in terms of the technicals, this article came out a few days ago. And in the last few days, you can see, Sterling had a little bit of a bounce, minor, and then it's just kind of hugging the 185 level, traveling sideways. Candles are small. Got an exhaustion candle tail there. That tail doesn't reach there, despite the fact that we're red, okay, on the day. So I'm going to say you've got, on a close basis, decent support there. Get that line in. Where would you buy sterling? My own view is you've got those previous lows there. So I get my line straight. A little candle tail there. This line is near a round number. You want to get above the round number, which is 187. Draw trajectory, which is there. You need to come through here, that tail there. So I'm going to say 187.20. Yeah, it's been a nice downtrend. You do have a little bit of a bounce there. Come down, and now we're kind of traveling sideways with everyone bearish of sterling. Not everyone, but the majority. So if we come through here, you'll get a run to the upside. But how far could we go? I think, if you're looking at this as a swing trade, you'd be looking for up to the 195 level, okay? I think sterling could get up to that level. If we get risk off, basically sterling is going to do better than the Aussie dollar. You can see it on the left of the chart there. So you could, and it's a could, get up to 205. But I think, if you aimed for 195, that would be a good level. The risk reward is good. You need to put your stop bank behind that red tail, well clear of it. But you're going to get about 4 or 5 to 1, aren't you? So it's decent risk to reward trade. Also, when you're trading, if you do break up or you don't follow through in the way that you like, or you feel the price action isn't following through strongly enough, you can just freeze the trade and go flat. But if she runs, I think she'll run up to 195. Very oversold. Price action for me, this sort of coiling sideways, low volatility in the last few days, points to possible exhaustion of the downtrend. Look to go long. Right, and what we will do now is we'll look at the next trade setup, which is, of course, GBP PLN. Right, GBP PLN daily. I'll do the technicals in a moment, but in terms of, we've obviously seen the GBP fundamentals without the PLN fundamentals. Well, it has gained traction to the upside and pushed the GBP down on the Euro Rescue Fund proposal, which is to help indebted nations. Market is seeing that as very bullish. It's a proposal. Noted this on our Facebook page and a few posts, that the fund is too small. And also, is it going to get approved? All 27 member states have to agree. 4 are very anti the idea of loans, the idea of grants rather than loans. So, it's bounced on the proposal, but that proposal's got to become reality. We don't think it will. If it does, in the price. Obviously, the euro gets a push up on the rescue fund and drags the PLN and other euro proxies with it. In the price for us. Poland's economy least affected by COVID-19, according to the EU Commission data. From our perspective, so what? It's export-led. It is actually like Australia. I think it sends about 70 or 80% of its output to the EU. EU's got terrible problems, okay? It's also got high US debt, okay? So if risk off comes, that's going to be bearish for the PLN. You can get flight of capital. Yeah, obviously from a technical perspective, you get a nice rise up in the sterling there. Then we top out. We come down really aggressively. Nice big move to the downside. You can see the volatility up as the Bollinger Bands are wide apart. Obviously, when we're traveling sideways, they're tight together. We do like aggressive moves down and then play the outer Bollinger Bands. Our view is you're not going to stay outside of an outer Bollinger Band for long. And you do come outside on that candle there, back in blue. This one's red. That tail can't reach that tail. Okay, we're not positive, but yeah, basically, I think the selling is exhausting, and yeah, I'm going to say the 490 level is good support. Obviously, we came through it in these violent candles here, then moved up from the level. So 490 is support, and in terms of that tail there, we can just draw a trajectory. And the reason I'm doing that, sorry if I can get my line straight, it's where we closed. We're above the previous close, back within the Bollinger Band. Where would you buy? Go through the high with a double top there. Where would you aim for? Up there. So from our perspective, decent looking trade. If she does recoil, she should recoil pretty quickly, so hopefully bring your stop up pretty quickly as well. Yeah, sterling has been under pressure in the crosses, and I particularly like the look of these two. Relatively low risk against the reward potential. So that is the video for today. We'll see how these trade setups pan out, but that's it. I will speak to you soon. Thank you. Take care. Have a good day.